You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean but one thing. It is time to kick off our broadcast year here on the Options Insider Radio Network, as well as to kick off our week. What better way to do it than, of course, with a taste of the old OB, a.k.a. the first episode of the Option Block for what we all hope is a fantastic year of 2021. You know, looking back a year ago, we were all excited. It was the kickoff of a brand new decade, start of 2020. All was sunshine and optimism. And look how well that turned out. So maybe we'll keep some of our optimism in reserve here. But still, looking forward to a hopeful year in the future. Looking forward to a great year on the network as well. Again, I want to thank everyone out there who joined us over the crazy, turbulent year that was 2020. After the fact, maybe subscribing to our podcast and downloading our app, joining us live on social media, all the different ways you guys engaged with us throughout 2020. I want to thank all of you. We know it was a crazy time for everybody. Hopefully we made your year a little bit better, a little bit more insightful, a little bit more informative. Hopefully your portfolio can thank us at the end of the year as well. My name, of course, I got so excited to introduce myself. If you're new, first off, welcome. B, you missed a heck of a year. C, my name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And we thought we'd kick off the year and indeed our broadcast week here the way we've been doing for a little while. Guessing that old 80s theme song from TV. You know, there will come a point probably in the year of madness, hopefully not, year of quiet, that is 2021, where we'll probably exhaust the well of 80s TV theme songs, and maybe we'll have to mix in maybe some movie themes, other fun stuff like that. But that day is not today, listeners. So without further ado, let's see if you guys and gals can name that theme song.
Just a good old boy, never meaning no harm. Beats all you never saw, been in trouble with the law since the day they was born. Straightening the curves, flattening the hills, the mountain might get them, but the law never will. Making their way the only way they know how. That's just a little bit more than the law will allow. Just a good old boy. They wouldn't change if they could. Fighting the system like a true modern-day Robin Hood.
All right, a little bit of a blast from the past. Uncle Mike is already annoyed that I am insulting his intelligence. But you know, we have kind of done a lot of the other major 80s themes. This one, you guys have been sending in great suggestions. Keep them coming. We love you guys. I'll have to pull up who suggested this one here. I almost said the name. But it's a good one nonetheless. Kind of an iconic theme of the 80s. And since he's probably going to get it, and since he won our 80s themed guessing game for with some impressive pulls, Airwolf, and indeed he also pulled Hardcastle McCormick. He got that one too. So he's probably, the bookies have him in the lead here for the favorite to win the game for this year. So instead, we'll start by welcoming on for the first time in 2021 the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, and let's see if you guys in the land of the pit can pull out to an early lead against our reigning champion, Mr. Uncle Mike, sir. Can you name that theme song / show, sir?
I mean, come on. I mean, I appreciate you starting out the year easy, but, I'm going to say that this was two bootleggers that drove an orange car by chance. And, maybe had a run-in with Boss Hogg and Roscoe P. Coltrane. That's going to be my guess.
You have to recall, too, that sometimes the Rock Lobster is in your cheer, and he hasn't gotten one of these right yet. So I'm trying to dumb these down a little bit to his level, too, so he can have a chance to play. So there you go. Yes, the Dukes of Hazzard. You are correct. The infamous, iconic Daisy Dukes. The General Lee, I don't think the show probably could air right now in the year that was 2020 and indeed 2021. Maybe some concepts folks might like out there. But old school TV, they didn't look at such things in that way. You could wear your Daisy Dukes and drive your General Lee and shoot your explosive arrows and everything else that show was all. What an insane show when you look back on it in retrospect. Yet that was the decade, that was the 80s. And also joining us, Mr. Uncle Mike, I'll give you credit for it too, because I know you knew it. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. And what are some of your abiding memories of the Dukes of Hazzard, sir?
You mean that wasn't Silver Spoon?
Almost.
Yeah, no, I liked that show a lot as a kid, and so just a lot of good. It was this. After a while, it was the same plot every show, and that Boss Hogg had some type of way he was going to try and steal something, and then Bo and Luke Duke would try and foil his plan, and then they'd get arrested, they'd break out, and somehow they would make everything right and not hurt Boss Hogg or hurt anybody. Don't get me wrong, they'd get in fights and things like that. But I mean, ultimately, the good guys would always win. And then like every third episode, they'd have some celebrity sing at the Boar's Nest. And it was a great show. It was a lot of fond memories watching that show.
Repetitive wasn't a problem back in the decade that was the 80s. Let's see if 2021 is going to be repetitive as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to our first Trading Block for the year that is 2021. Now we're deep well into this new decade of the 2020s. We kind of know what it's got for us. We're prepared. We're ready for whatever shocks to the system may come, hopefully less than last year. So we're going to kick it off. We're going to talk about what's trading now, then we're going to look back a bit at the year of madness that was 2020. I encourage you, if you haven't done so already, check out some of the deep dives we did already on 2020 on shows like the Advisor's Option and TWIFO and indeed Volatility Views, where we kind of went beat for beat throughout the year. Not going to do as detailed of a beat for beat here on these shows because we've already done it a few times here, but we will hit the highlights and indeed the legion of lowlights that was 2020. Speaking of lowlights, the year's starting off in a bit of a low light in and of itself. You know, we saw the markets kind of racing to the north to end the year and then kicking it off here this year. We're seeing a lot of them very aggressively in the red. Most of the major indices were off around 2% to kick off the show out there today. So interesting times afoot out there. Most of them still in that range. The Dow's the laggard, off about 1.8%, with the S&P and NASDAQ both threatening 2% in the dark side direction. That means coming into the showtime, VIX was ticking up a wee bit, up to about 28.25, puts it up about 7 handles from our last show, the tail end of that, a year ago, the tail end of last year. VVIX was at about 129 and a third. Coming into showtime, puts it up about 16 points from last show and puts it well north of that 120 level that we've been watching for a while here in the pandemic year that was 2020. VXX also back up nearly 2 points, about 1.9 points, up to about 18.4. So threatening maybe again that 20 handle sometime soon, or perhaps going right back down. We'll see. Probably the latter if past its prologue out there. And VolQ up quite a bit as well, up to about 29, which is up about a little over 7 points, about 7.25 points from this time last show. All right, let's go around the horn. Since he got our 80s themed guessing game right today, we'll let him go first. Mr. Greasy Meatball, sir, before we dive into the year of madness that was 2020, what is lighting up your tape on this kind of mad kickoff to 2021, sir?
Yeah, some nice selling today. It could some tax selling. I think that the market as a whole was really wound up, and we're just seeing a little bit of that. And we have a little bit of election chaos still that I think is weighing on things. And we've got these electoral challenges that I guess are still weighing on things a little bit. But this just feels a little bit more like a little bit of profit taking. First of the year, reset the calendars, take off some positions, tidy up the portfolio. Wouldn't be surprised if we saw, if this is an excuse to sell, maybe a little bit more follow through, because I think things did get a little hyper wound up leading into the end of the year, and maybe that's coming off just a touch today.
Just a touch. Hard to argue there isn't a little bit of room to sell. All these indices are rallying pretty hard for the year. We'll get to all that in a minute. But first, Mr. Uncle Mike, sir, not exactly an Uncle Mike type of day, actually the polar opposite of an Uncle Mike type of day. What is lighting up your tape out there in this inauspicious kickoff to 2021, at least from an Uncle Mike perspective, sir?
Well, it's an interesting kickoff from the standpoint that this week we could have potential gridlock or non-gridlock confirmed with the Georgia elections. We still could have some type of electoral chaos in terms of the Congress certifying or not certifying the election. Now, I personally really don't see Trump pulling this off and winning the election with the decertification or everything that's going on. I don't see it happening. I mean, the odds, I'll give my odds about 1,000,000 to 1 on that, but I could be wrong. I guess, I always remind me of the Dumb and Dumber movie where the guy asks the girl, so what are my chances? About 100 to 1. And then she says, more like 1,000,000 to 1. And the guy's all excited. So you're telling me there's a chance. So there is a chance, but I think it's highly unlikely of anything like that happening. But what I think can be a big factor on the market, and what I think could be something that is driving the market down today, is the concern of potential gridlock versus non-gridlock in the Georgia elections. I agree with Mark from the standpoint that today is a day to where it is people, as Mark put it, tidying up positions, just because of the fact that what is different today than 4 days ago? Really nothing. We knew that the elections were coming. We knew that there was potential electoral college chaos, and we've known about this coronavirus thing. So there's really nothing new today that didn't exist a few days ago. So it's for that reason I think that today is just a day to where people didn't want to take capital gains in 2020, so perhaps take them in 2021 to postpone them a year, maybe just rearranging a few things, saying I'm a little bit overweight this, underweight that, maybe putting a little bit more money into taking out of stocks and possibly going into commodities. Silver is actually up around 3% on the day today, and looking at SLV. So that could be a spot to where there could be some money shifting. But overall, when we're looking at this, the S&P 500 down 1.7% on the day. It was down a little bit lower. We've been rallying over the course of the last 20 minutes or so, or pretty much since this show started. So apparently Sebastian's driving the market up with his positive comments. But nonetheless, I think this is just a day to where we got to take a look at things and see where we go. I have made a couple of rule tweaks to my aggressive strategy when the market's negative on the year, but I'm going to talk a little bit more about that in the strategy block, whether we get to it today or whether we get to it Thursday. But I have made a couple of minor tweaks to it that I will address.
And Mike, did you get an opportunity to check out what happened with crypto over the weekend? Pretty nutty move. Mark, I know you do. We do a crypto show here, but Ethereum made a 30% move over the weekend, and Bitcoin rallied to about 34,000 before it pulled back. So we now have two cryptos that are worth over $100 billion. Ethereum crossed $100 billion over the weekend, and Bitcoin is now about $600 billion in market cap. So there is we saw some pretty wild moves in the dollar alternatives. And like you said, silver and gold are moving as well. So shows you that there's definitely some dollar action in play here as well. I think is definitely affecting the stock market.
Yeah, the ETH jump is a crazy one. Everyone's talking about, hey, it's a good alternative, maybe lower cost alternative to Bitcoin. Maybe not so much anymore, getting a huge run. We'll talk about all that fun stuff on the crypto rundown a little bit later today here on the network. And let's see what else we got lighting it up out here today on the old network. As of a few minutes ago, pretty active day, as you might imagine, out there on the street. Most of the major indices pretty much at or pretty close to already their ADVs out there. VIX at about 351,000. The ADV is 394,000, so closing in there. SPY at about 3.92. It's already north of its ADV, which has dropped to about 3.3 million. The S at about 1.03 million. Its ADV is about 1.07 million, so the S pretty much already there as well. The Q, 788,000. The ADV, 866,000. And small caps, a.k.a. IWM, at about 448,000. The ADV, 607. So small caps, at least volume-wise, a little bit of the laggard out there. Let's go out to the most actives out there, what you folks are trading right now. Let's see. Coming into today, as of a few minutes ago, the top 10. Interesting. Most of the names you heard of, but some newcomers, like number 10. We've got newcomer to the top 10 here for kicking off the new year, maybe with some new names. QuantumScape Corp. Of course, if this price action is an indication, maybe not so much for the long term here. They're doing 212,000 contracts right now, so that's a pretty aggressive top 10. Cost you 200,000 plus contracts to break into the top 10. If you're wondering, QuantumScape Corp, ticker symbol QS. They produce solid-state lithium-ion batteries, electric cars. They're down $31.50, or about 37.5% today. So not a good day here for QuantumScape. Just a few weeks ago, back on December 22nd, they were trading $131. So they're trading $52.87 right now. So bit of a worm turning, looks like, out there in QuantumScape Corp. Wow, that's quite the move. And they tout Bill Gates and Volkswagen as investors out there, so maybe they're not so happy right now. By the way, QuantumScape breaking into the top 10 for the first time out here at number 10. Number 9, Microsoft, 236,000. Number 8, Baba. Talked about them on the show recently, how they're not exactly looking too friendly with the regulators over there in China. It's good for 241,000 contracts right now. Number 7, Amazon. Most of the names you're familiar with, the rest of the top 10. Amazon, number 7, 248,000. Number 6, NVIDIA back in the top 10. It's kind of interesting. 256,000 there. Number 5, good old Palantir. Kind of a perennial top tenner in the last few months here, 294,000. Number 4, AMD keeps fighting away, 360,000 contracts there. Number 3, Tesla. Yeah, I said number 3, Tesla. Only a paltry 979,000 contracts. What could possibly trump Tesla out there for you guys out there, the mad folks who love to trade the electric cars? Well, of course, it's NIO. NIO back in the number 2 spot. I haven't seen them up in a little bit. 1.01 million contracts. Good for number 2 back up there, of course, the Chinese player in the electric car market. That means the big dog, once again, Apple. Almost 1.5 million contracts right now, listeners. Just insanity, but just about any way you could break it down. A lot of paper hitting the tape out there today. By the way, speaking of paper, we don't have the final numbers from OCC for the year. Spoiler alert, they were good. But we don't know exactly how good. And, of course, that means they're going to release them the minute after the show airs, of course. So we'll probably get to them on the next show. But it's going to be pretty strong. They already blew past the previous record for the year by September. So good numbers out there. Speaking of good numbers, some folks looking forward maybe to this next earnings season. Maybe that will start changing things up a little bit. We got some names coming up a little bit later, even on this week. We got Bed Bath & Beyond. We got my favorite name out there, the Walgreens Boots Alliance. Sounds like it comes straight out of Star Trek. We got Micron and a few other names you actually have heard of popping off this week. And then next week, we got the financials kicking it off in earnest, JP Morgan, Citibank, Wells Fargo. So those of you who want a little bit more micro-focused back and forth, you got it coming up here. We've got the earnings move reports for those and prediction reports already up there on the website, theoptionsinsiderforyou.com. I'll give you a couple right now. BlackBerry's coming up on the 7th here. BlackBerry, I keep saying BlackBerry. Bed Bath & Beyond. Old school. Come back old school with BlackBerry. They're $17.76. They're pricing in $2.70. In the past, they moved about $2.60. Not a ton there. Walgreens Boots Alliance, $39.88. They're pricing in about $2.25. In the past, they moved about $2.25. So maybe some folks are learning from the year that was 2020, how to price their earnings straddles. And Micron, $75.18. In the past, they moved $4.88, and they're pricing in $4.89 right now. So maybe if these first few names are a good prologue for what's to come, then maybe some folks have started to understand how all this earnings pricing thing works. Either way, you can break it all down for yourselves out here in a little bit. But now we're going to keep on rolling. And let's just start by looking back on this mad year. Again, like I said, we did pretty detailed look backs already on the advisor's option, on volatility views, and on TWIFO. So check those out. They were pretty extensive in their various categories in terms of hitting the highs and the lows of the year in 2020. Kind of do a more general looking back here. But again, what a mad year it was here in 2020. All the indices obviously up strong. Kind of depends where you're hanging your hat. Dow had a good year, obviously. It added 1.4% just in the last week of the year out there on the Dow. Over 3% in the month of December. And it ended the year 7.3% up on the year for the Dow. The S&P gained 1.4% in just the final week of the year. So that puts this 2% sell-off we're seeing today in a little bit interesting perspective. It gained nearly 4% in December, almost 12% in Q4, and 16.3% for the year of the S&P. And everyone's favorite tech-heavy index, the NASDAQ, even though S&P and NASDAQ kind of blurring those lines these days, had its best year since 2009. So it's been a while for the NASDAQ, but a pretty good year. 43.6% in the hopper for the NASDAQ. Had a 0.7% rally in the final week of the year. Almost 6% rally, 5.7% in the month of December. And in the Q4, added nearly 16%, 15.7%. Those numbers all sound pretty good. And I said this on TWIFO, looking at the chart that we broke down on TWIFO for how many trading products on CME were up versus down. For the year, we were hard-pressed to put together a bottom five. That's how pretty much upward biased it was on everything that traded over there at CME. You look at that chart, it's full of green. You look at these S&P charts, they're full of green. And if you just looked at that apropos of nothing else, you look at that and say, oh, wow, what a great year the world must have had. It must have been a great banner year for everything in society. And it's kind of hard almost to reconcile those types of numbers and those types of overwhelmingly green charts with the year of horrors that we had. That was 2020. But let's go back a little. Let's go back to our first show of the year last year where we were kicking off a new decade. We were all excited. Hey, 2020, new decade. Let's see what it has in store for us. It was kind of a bit of a tranquil start to the year, very briefly. It only lasted a little bit. But the year before, 2019, VIX kicked off north of 30. Compared to that, 2020 was starting off kind of quiet. VIX was around a 12 or change, lower in the teens, so much quieter than it was the year before. It seemed like it might be a pretty quiet start to the year. That didn't last too long. Around the third of the year is when we had the whole assassination tango down there in the Middle East. And that's when vol started kicking in a little bit more. Not a ton, but a little bit more. It seemed like maybe things were starting to pop off there. Of course, everyone forgets this now because everyone's so focused on what happened recently. But there was an impeachment ongoing to start the year as well. So there were a few factors still at foot that wouldn't play out until the first week of February, where we finally had the vote on that. Of course, the pandemic fear started creeping in there as well. They really first started making themselves known in terms of from a market impact late January, around the 24th of January or so, is when we started to see those sell-offs start to kick in. The first real wave, obviously very muted to compare to what we saw later, but that was the first wave of, hey, maybe something is afoot here and it's not good. If you go back to those shows, listen to some of the numbers we were talking about, a few hundred people in the U.S., they seem quaint by comparison now, but back then it was enough to spook everybody. And then, of course, we rolled off more aggressive sell-offs in February, and then the mother of all sell-offs, followed by the beginning of the mother of all V-shaped recoveries throughout March, and that latter portion, that latter V, pretty much lasted the rest of the year. Of course, we had major unrest racking every major civil center throughout most of the summer, including right here. We have National Guard troops on our doorstep here while we're recording shows. An interesting time, not one I'll certainly forget anytime soon. Then, of course, leading into one of the more divisive elections we've seen in recent electoral history. Of course, I say that, looking back in history, even going back to the early days of the Jefferson, Hamilton, Adams days. Things are pretty divisive back then, or certainly the Lincoln days. So we have a bit of a short-term historical context for these things, but still a pretty divisive election nonetheless. And of course, pandemic death rates skyrocketing, new strains popping up, even as we have vaccines hopefully racing to the rescue. So a lot of that to set the table here. Let's go back around the horn. Let's start with the uncleest of Mikes. Mr. Uncle Mike, sir, what are some of your enduring memories, enduring lessons, enduring trades or trends or things that really resonate to you for the year that was 2020, sir?
Oh, boy. We don't have enough time on the show to go through 2020 for just one show, but this has to be the most unique year I've ever experienced in the time I've been on this planet, and that's for sure. I mean, we went from a time where we had a lot of optimism at the beginning of the year to where there was a little bit of mention about, I think we even joked about on the show, we called it the beer virus. And this is something that no one really could have predicted coming into play. And immediately, all of the interest rate hikes that we had going into this past year, were immediately just taken off the table one night out of concern for keeping the market stable. We then have a point to where we have a lot of divisiveness from the racism standpoint. We have just a lot of bad things happening, and there's just a lot of weird, bad stuff is probably the best way I would describe looking back on 2020. And I think that some of the takeaways that I'm taking away from it are that it reemphasizes something that I tell myself before any trade or investment that I ever make, anything can happen. And yes, of course, if you make a trade where, oh, this only hurts me if this happens, understand that whatever this is, and I'm making air quotes right now, it is possible. And we learned that, or I didn't learn it. I mean, you guys didn't learn it. We've all been there for years, but we all got to see that reinforced in 2020. Risk management isn't a joke. And that's something that I think was very important that was shown throughout 2020, and that you need to manage risk. And we've harped on that to death on this show for the past 900 some episodes, and it showed in 2020. The other thing that I think is an important takeaway of 2020 is we saw the ugliness of how our country can be divided. And what I mean by that is that we're at a point right now to where if you wear a mask in public, there's going to be some people that say, oh, why are you letting the government tell you what to do? But if you don't wear a mask, then people on the other side are saying you should be at home and shouldn't be wearing a mask or whatever. I guess where I'm going with this is it seems like there's really no one's really interested in middle ground on this issue. Everyone's on one side or another. I guess the Mike TOSAW solution to how we handle things is that everybody, whether I'm not saying make things mandatory or anything like that, but if you open up everything, but everybody wears a mask, and then the people that are higher risk just stay home, that's going to solve a lot of problems. But no one's willing to do both of those things, whatever side of the fence that you're on this. And it's troubling. It's troubling what we saw in 2020 in that one side wants to bankrupt small business, but then the other side wants to just be reckless and have zero concern for medical science. And if you take one of those sides, or if you try to do something that's in the middle of that, or try and work a compromise, even with your debate with your friends or family, you're automatically labeled as one side or the other. And so we really saw an ugliness in our country of not working together. Now, on the flip side, we also saw a beauty in our country in that we're very divided on this issue, or by we, I mean as a nation, we're divided on the corona issue in a lot of ways, but we're still a functioning society. We still have the best country in the world. We still have the best financial system in the world. We still have the best pretty much everything in the world. And even though we have that, we're still together as a country. And I think that says a lot about our nation, the fact that we can disagree as vehemently as we have as a country over the course of the last year, and we're still together. And as of a few hours ago, we had markets at all-time highs. Now, obviously, they've pulled back this morning, but my point is that we're still strong. Now, granted, we are printing a lot of money this year. This past year, a lot of money was printed, and that we had a lot of stimulus, a lot of PPP. We had a lot of money thrown into this market to keep it up, but we're still there, and it's still a functioning economy with what we have. Now, will the money be paid back? Is it going to increase our debt? Yeah, no question. Is this going to weaken our dollar? I don't see how it couldn't over time, but with that, we're still here. And I think that's something that's very important that says a lot about our country. And with whatever happens this week, with the chaos of the electoral college debate, with the Georgia runoff, we still get to pick our leaders, and we still get to do what we need to do as a country. And there's no place on earth that I'd rather be. We got a lot of problems that we need to fix, no question about it. But we are still America, and we will still continue to be the great nation we are.
Look at you kicking off the new year with some optimism, sir. It's probably why I started with you. A little bit of an optimistic outlook. Now let's go back for some diehard cynicism. Let's go out to the greasiest of Meatball. Mr. Meatball, there were a lot of lessons that could be taken away from the year that was 2020. Many trends, many interesting, some horrifying developments that came across our radar. What really stands out to you? What resonates to you through an options and markets lens on the year of madness that was 2020, sir?
You know, if I was going to give 2020 a name, all right, I would call 2020 the year of hyperbole, because that is what it was. It was the best, it was the worst, it was the highest, it was the lowest. It was the craziest, and so it was just a whole mess of hyperbole. And that is kind of what I see. Now, I've got some questions for 2021 that I think needs to be answered. And my first question, and I think this is a big one, is Jack Ma still alive? Because I think a lot of people are wondering whether that is the case, because he hasn't been seen in a couple of months. How messed up is our healthcare system if Berkshire Hathaway, Amazon, and JP Morgan, who just announced they're canceling their 3-year venture to come up with a efficient healthcare system, they just announced they're scrapping that. So how is it possible that the 3 of the best companies in the world can't figure it out? What is going to happen with healthcare in 2021? If you'd have told me that we'd have an all-time high NASDAQ and S&P with the VIX near 30, I would have said, okay, what? So now the question is, are we going to see a lower VIX and lower market in 2021? I think that's entirely possible. What happens to all of these Robinhood traders when they start going back to their actual jobs? When when the economy starts to open up, do they continue to just stay in trade, or do they go back to their jobs? And final question, does this Robinhood explosion end the same way that the stock day trading explosion ended in 2000 with a angry thud that wipes out a lot of value. So I think those are the big questions that are on my mind and are kind of what I'm watching with a tight lens right now in 2020 and in 2021.
Well, let's hope some of those Robinhood legions are listening to a show like this or something else out there where they're getting a little bit of education fix in the world of options. And hopefully you're right, because that day trading boom became a bust very quickly. I have a feeling this one's going to maybe call it the light of optimism in me. Obviously, a good chunk of these people will probably lose some money and go on to other things, but I think there will be a larger core that will survive and maintain and become steady options traders going forward. Who knows? Maybe this year was so good for many of them that this is their job now. We'll see. Hopefully that's the case then what Uncle Mike said earlier about risk management not being a joke. Hopefully that plays out. Let's break down some of the other interesting things we noted here for the year. Really quickly, just some winners and losers here on the year. We talked about the major indices, obviously. Those were big winners. In particular, let's talk about some individual names you guys like to trade that were big winners. Obviously, the big dog there is Tesla, up nearly 700% in the S&P 500. Etsy also had a good year. We didn't talk about it much, but it was a quiet winner out there to the tune of 329.5%. Folks liking their handcrafted goods out here in the year of madness that was 2020. Also, NVIDIA up 120, almost 121%. They were a big dog for a while. Everyone looked at them as the bellwether for crypto. Oh, crypto, going to buy NVIDIA graphics cards. That kind of didn't work out too well, but now we're seeing other interesting use cases and a lot of interesting developments over there on the graphical side of the fence. PayPal, also right behind NVIDIA, almost 121% as well for obvious reasons. A lot of online transactions going up this past year. Mr. Meatball's favorites, L Brands, easy for me to say, at about 115% on the year out there. So let's see, those are our top 5 here for the S&P. Losers, now you can probably guess some of these as well. Carnival Cruise Lines off 59% for the year. Number 1. Number 2 was Norwegian Cruise Lines off 57, almost 58%. Number 3, Occidental Petroleum off 57%. Number 4, Technip FMC. I'm not sure what this one is, but it was off 56%. And then number 5 here was Marathon Oil. So a bit of a theme for most of that top 5 to the downside there was petroleum and cruise lines. So not a good year for them. On the NASDAQ, again, similar names. Tesla, of course, number 1 out there. Again, shows the overlap between between NASDAQ and S&P these days. Number 2, Moderna Therapeutics, up 530.8%. I think we all know why that one was moving as well. Peloton, number 3 on the NASDAQ this year, up 472, almost 473%. This vaccine overnight kind of turned what was maybe deemed an expensive luxury into pretty much a necessity if you wanted to work out at home. So that was just, it's hard to say this was a gift or anything, but for that specific name, the stay-at-home order certainly was a boom. Of course, a boom for Zoom as well. Zoom number 4, up 451.5%. And number 5, DocuSign, up 230.5%. Losers in the NASDAQ, let's see. Let's go from the bottom to the top this time. Number 5, we got Marriott, off nearly 15%. Number 4, American Electric Power, off 13.85%. Number 3, we've got Gilead off 12.1%. So these are actually going in the other order than I wanted to, but say lovey. You got number 4, Sirius off 11.89%. And I guess they put number 1 here, even though number 1 least loser, I suppose, is how they're viewing it, but it's kind of backwards. CDW off 9.5%. Dow really quickly. Dow, biggest winner, Apple. 79.7. It's funny to say Apple and Microsoft in the Dow, but that's kind of where we find ourselves now. At Microsoft up 41.25%. Losers in the Dow, Amex off 5.75%. IBM off nearly 7%. Cisco, Uncle Mike's favorite, off 7%. Amgen off 7.5%, and JP Morgan Chase up about almost 11%. Other interesting trends that came to light for us and from an options lens throughout the year that was 2020. Well, Mr. Meatball, I should say, just alluded to this earlier. It's kind of been the recurring theme for the latter half of 2020, I would say. Earlier in 2020, we were kind of all fixated on a lot of other things, the mad sell-off, the recovery. It wasn't until, I'd say, partway into Q2 where we really started noticing, hey, these one-lot guys and gals are here, and they're here in force. There was a big piece in the Journal, I believe it was around June, that kind of really highlighted it for the first time in a major publication. Hey, these one-lot folks are out here, and they're buying calls. and it was kind of off to the races from there. Break them down however you want. The one-lot traders, the Robinhood traders, obviously every major brokerage platform, doesn't have to be just Robinhood, had a huge influx of newcomers. Every broker we talked to, every broker we work with here on the network, all had a pretty good year for the most part. So interesting things to watch there. So definitely a trend that we noticed, and one that Mark was just talking about we hope continues for 2021 is this rise of retail out here. You guys are moving the market right now. You guys are dominant. And unfortunately, a lot of your trading is located and fixated in a couple of names and in a couple of strategies, pretty much buying calls in your Teslas and your Apples and those types of names and some of the other ones as we talked about here as well. So hopefully these people will evolve and get beyond that a little bit, because that strategy works until it doesn't, and it's a hard one to make payoff in the long term. So hopefully they're evolving as traders, getting a little bit more nuanced. So let's be optimistic. So I'll be Uncle Mike's here and say that. We also saw big trends, obviously, for the market. Don't fight the Fed. Don't get in the way of the Fed when they're saying, the limit's off for easing and buying up assets. That really was what kicked in this mother of all V-shaped recoveries out there. The other big trend of this year, we kind of just talked about it, top in the list, is just the takeover that was Tesla. Tesla was everywhere in terms of the headlines, in terms of what you guys like to trade. It was one of the few names that could really vie with Apple to be at the top of that top 10 list. There really has been all Apple all the time for the better part of the last decade from an options perspective, but Tesla is now in there. And certainly with these splits we saw out there, it has just kind of changed the game for how much paper these names are doing. It's literally absurd out there on how much paper it is. So Tesla has kind of moved itself into pretty much a perennial number twoer out there behind our number one usually, which is Apple. Of course, we've seen interesting stuff. The Flowmaster tweeting out recently that Tesla amounting to about 17% of OI for options. Remember, that's by value. So that's talking notional, which I'm not a huge fan of. But still, it's an interesting stat nonetheless. It shows how big Tesla has become, and it's pretty much dominated all of the mind share of all those one-lot traders we just talked about. Legions of them were pouring into things like Tesla calls. It made the skew just absurd out there in some of these names. You could get verticals at levels that were unheard of before. So from an attractive opportunity perspective, maybe some of you folks liked this as well. Other trends we saw out here, obviously in the top 10, it was still most of your FANG names that tended to dominate it. We saw NEO making some interesting surges, including again today. NEO kind of fighting their way in there. Other Tesla also rans like Nikola fought their way in ever so briefly, then right back down again. So the wake, the ripple of Tesla was felt in a lot of other areas as well, including dominating our top 10 out here. Some newcomers that kind of fought their way into the top 10 have been hanging out there now for the better part, at least of the last few months and towards the latter portion of 2020. Palantir, we mentioned them today. They've come on strong of late. I know a bit of a divisive name out there, depending on how you view the surveillance state that we all live in right now, but from an options volume perspective, kind of hard to argue with it. And also some sleepier names that managed to kind of hang on to their spot in the top 10 despite these other trends going on. Like AMD. AMD hasn't really been a top mindshare name. Has a lot of people out there really talking about AMD day in, day out, asking us questions about AMD, but it still is pretty much a perennial top 10er out there week in, week out throughout the entirety of 2020. And that's an interesting thing. Other names that were kind of hot, like Roku, kind of fell off, but AMD managed to stay in there and remain part of the top 10. Other trends that were interesting. Earnings vol. Don't touch it. That was the takeaway for 2020. I'm going to sit down with Matt. We're going to do kind of a longer breakdown of all the analysis that he saw from the year of madness that was 2020 from an earnings vol specifically format. Obviously, those folks at ORATS are out there crunching the numbers for us, but it started off, it seemed like it was going to be just a crazy year for earnings vol. We expected things to really start popping off with that first cycle, and it never really did. We saw crushing after crushing every single cycle until the last one of the year. And I mentioned kind of how they're pricing it now. It seems like maybe, I use this cautiously, maybe we're finally reaching that equilibrium point, but they priced in a lot of vol at the beginning and every name underperformed, so they annihilated the vol for the second cycle, and then they still underperformed, so they annihilated it again for the third cycle, and then finally, coming into the end of the year, it seems like maybe we hit that equilibrium point where they had annihilated the vol enough so that the names could start actually outperforming or at least matching up with their straddles again. So we'll see how this year kicks off, but earnings was just an insane thing. Things didn't matter anymore. You give no guidance for the entire year. Nobody cared. Whatever you want to do with it didn't really matter. Cut your dividend. It didn't really seem to have a material impact on the stock, and it certainly didn't translate into a lot of volatility out there. We saw cycles we have never seen before. 77% bang for your buck from a premium perspective. That means 100% is obviously if everything moved in line with their straddles. You're coming in at 60-odd, 70-odd% out there some of these seasons. So just extreme underperformance from an earnings volatility perspective is kind of the name of the game out there. Other trends, obviously, Mr. Meatball talking about things we're going to watch for this year. Remote work, is that still going to become a thing in 2021? Are people ever going to really travel as much as they used to? That's going to be a big deal for hotels and airlines and, of course, cruise ships and things like that. Are people going to keep working out at home? Things like Peloton continue to be a thing, or they'll start going back to the gym? And speaking of gyms, will high-touch type businesses like gyms and others, will they ever really recover? People ever really be that comfortable going out and doing all these types of high-touch, interactive type activities the way they used to do before the pandemic? Fast forwarding to an odd block perspective, what we saw for the year, there were a couple of trends that seemed to dominate our odd block this year. First off, this was pretty much the year of selling line in the sand puts. That's pretty much what we profiled week in, week out on the show. That was what all the size trades were, all the size blocks, folks selling line in the sand, some more aggressive than others. And pretty much, spoiler alert, they pretty much all worked out. I'm hard-pressed to think of one line in the sand put that really went against someone pretty aggressively that we profiled this year. So you have one theme, one takeaway from our odd block this year, go figure. A huge rally year, line in the sand puts worked pretty well. It's kind of a basic one. I think Mr. Rock Lobster, what did your cohort call him, Mark? Oh, he calls them girlfriend's Ferrari money. So people buy, I don't know why it has to be a girlfriend in Ferrari, but that's how he put it. Send your letters and emails to Andrew. A lot of girlfriend Ferrari money hitting the tape here this year. Other trades that worked out pretty well, we touched on a little bit on vol views. Of course, they weren't odd block trades, but some of the ones that worked out, there were no home runs, enormous ones I could think of that really resonate to me in our odd blocks this year. A lot of decent puts that we talked about. And vol views and others, you saw some home runs, like 50 Cent. His options went from about 50 cents to, $45. That was a pretty good trade, at least from an options perspective. A lot of the ratio verticals we saw in vol products leading up to the big explosion, those all worked out pretty well out there. Mr. Meatball, sir, any trends or any interesting trades or things that resonate to you from an odd block or from an unusual activity perspective this year, sir?
Well, yeah, you brought up 50 Cent. He spent most of the year hedging and then finally paid off. So good for him. Like we said, the one lot trader really did lead this revolution in changing and trading. All these little names, these little hot names, absolutely blew up. And then the other area where these little names blow up is you have stocks under 10 that, would just see this giant increase in volume and volatility as Robinhood traders jumped in. Names like GE and Ford, American Airlines, we have these days where there's 300,000, 400,000, 500,000 contracts. And you're like, well, what's the news? And it's, all front loaded. All of the trading, all this volume is week of. And I think that's the part that I think is really fascinating is these aren't just bets. These are tiny bets on looking for a huge move in the next 3-4 days. It's not a trading that I'm very used to. It trades a lot more like sports gambling than it does anything else. And speaking of which, yeah, we saw online sports gambling names see a huge upticks. Barstool and Penn, DraftKings, and the like absolutely explode. And, like you said, Neo, Tesla, and Apple have just been juggernauts of volume, especially over the last couple of months. And I think that is going to be interesting. And like I said, I think Alibaba is one to watch in terms of the ramifications that this could have for all the Chinese names going forward. It is just fascinating. You've got a billionaire, founds the biggest, most successful two companies in Chinese history. They're the poster boy for the new Chinese capitalism. And then the CEO pisses off leadership in China, and we see what they can do. And like I said, nobody has seen the report out this morning. And I'm not being conspiracy guy, but Jack Ma has not been seen in 2 months. He has not made a public appearance. And that, I really want to see that guy's face, because if he goes missing, the ramifications this has for long-term investing in China, I don't think can be understated. I mean, there's already issues with, UA and some of these Chinese names being blacklisted from the United States. But, if generational leaders in business can just disappear, that does not bode well long term for the success of the Chinese model of technocratical capitalism. I don't know exactly what you want to call it. In terms of odd block, the last piece, yes, it is the year of the line of the sand put. It is the year of index products and ETFs taking a back seat to equities for the first time in a very long time, right? We've got equity volumes exploding, but SPY was dropping, VIX was dropping, SPX was dropping. All these giant indexes just seeing a lot less paper. And while at the same time, all this equity flow is exploding. And what does that do to the dynamic? And then I guess the final piece is the ARC effect on individual names, right? A name goes into those ARC trades and everybody's piggybacking and jumping on it. I mean, their strategy of, look at our track record and then releasing their trades every day and having people piggyback it to almost self-fulfill their own prophecy is borderline brilliant.
They used to call those pump and dump back in the day. Now they have a new name for all that good stuff. We'll save the first strategy block of the year for our next episode. Uncle Mike, anything resonate to you looking back on the year that was 2020 from a strategy block perspective? Maybe ones that stood out as being particularly prescient or interesting? Anything resonate with you there, sir?
Well, I think, just like I said, risk management in general is what's really resonating with me, and that you have this. And the other thing is that you have the ability. I would say that 2020 is the year that brought back the spread, just because of the fact that whether you're bullish or bearish, if you had single leg options, a lot of times you likely did not do as well as you would have had you had spreads on the table, depending on when it was. And obviously, if you bought calls in November, you would have done well. But for the most part, I would say that 2020 really reemphasized the need for using the spread.
There you go. Reemphasize the need for the spread. Let's look back and look ahead really quickly as we're coming up against it here. We asked you guys last week, do you think VIX or spikes, where are they going to close for the year? And you guys picked elevated, which is not that elevated right now compared to where we are, but elevated compared to usual levels, the 17 to 23 range, which is about where it was when we posted the poll, 40.5%, 31% saying normal range of 12 to 16.99, and then almost 20%, 19% saying the pandemic level we saw throughout last year, which is north of 23. We asked you guys at the beginning of the show, a bunch of you have already chimed in. Very simple question to kick off the year. Do you think markets are going to close higher or lower on the year? Very basic. And so far right now, we got higher, winning with about 57%, lower 32.7%. And I'm already in cash at 10.2%. We'll let it run for the rest of the week to get a full sampling so you guys can play along out there as well. And then let's look ahead a little bit by looking back first. At the end of last year, we did some predictions at the end of our show and of our season, our recording season last year. Uncle Mike, he went out on a crazy limb with his prediction. He said we're going to have a lot of macro political events. Uncle Mike really swinging for the fences with that one, sir.
Yeah, that was one. I think we may have. We might for sure.
So that was your prediction for last year. Going out on a limb with that one, a year of an election. He also predicted a VIX at the end of the year of 10.41. We did not get close to that. VIX did not really break 20 anywhere towards the end of the year there. We also had the Rock Lobster on our end of year show last year. He said a lot of things. He said the election will loom large. That's kind of a given out there. He thought it was going to be the year for oil. He's been kind of long oil for a while now. Didn't really work out too well this year, unfortunately. He said the climate crisis has weighed on the oil industry. He also said it's hard to imagine at the time how much further tech could run. He was right for a little while with the big sell-off, then, of course, wrong when the rally started again. He said, I think the market will be wishy-washy until the election. We kind of know how that played out. He said, look for vol to rise heading into October and keep a bid until the election day. So betting on that old electoral volatility cycle, which pretty much did play out this year. He thought at the time, he said the same guy will probably win the election because that's what betting lines are saying now. So he was wagering at the end of last year that Trump would probably win, and that was what the smart money was betting because barring some sort of tremendous upheaval, which we did see many of in 2020, it seemed like the state of the course was going to win. He predicted a VIX at the end of the year of 11.99. Of course, we were nowhere near either of those. Everyone predicting maybe a little bit quieter end to the year here, going for the end of last year. But let's wrap up the show. Let's look ahead a little bit again. Let's have a little bit of fun. Let's start with the greasiest of meatballs, sir. If you want to leave a prediction, what you can expect outside of wanting to see Jack Ma's face again, and we all want to see that lovely face. Outside of that, anything you're expecting, anticipating, you want to look ahead for this year in the markets. And then also, if you want to leave us with a VIX/vol prediction for the end of the year, have at it, sir.
Yes. So, I think in 2021, equal weighting or will outperform cap weighting. So I like the Dow Jones to be the best performing index out of the major indexes, maybe followed by the Russell. And I think believe it or not, the NASDAQ is going to trail. And I think healthcare and energy are going to be the leaders. Notably, I think CVS and Walgreens could have huge years, and the VIX will be 12.
VIX 12 even, so pretty close to your counterpart's prediction from last year, 11.99. Mr. Meatball with a VIX of 12. All right. Mr. Uncle Mike, same question for you, sir, as we round out our looking back on the year that was. Let's look ahead a little bit. Anything outside of your going out on a limb last year, if you want to go out on more of a limb this year, what you're expecting from the markets this year, and if you want to leave us with a vol prediction, have at it, sir.
Got it. I'll go with a vol prediction. I'll go with 11.21 for my vol prediction for this coming year. Obviously, you see from my vol prediction from last year, that's why I don't trade vol. I mean, of course, everyone who trades options trades vol, but that's why I don't trade that specifically. And then in terms of predictions for the coming year, I think that we will see increases in commodities in general. I think that's something that we will see. I think that we will see, of course, I'm bullish on the year, but I'm always bullish, so you can put that down, but I think that's something that we'll see. And then I think that we're going to have, I don't know. I mean, I would say that this coming year we're going to be bullish, but I would say that based on everything with which I'm seeing right now, I think a lot of this would also be based on the elections in Georgia of who's going to win in the next 2 days, depending on whether we have gridlock or not. But I do think that we are going to have a much calmer year this year in terms of less division. And I think we'll be able to mend things, not only in the political realm, but just in a lot of ways with society.
Well, let's hope that latter one is indeed correct. We can all do a little bit more calm out there. If that translates to a little less options volume, I think we'll all take the hit out there. But that's going to do it for our end of the year spectacular. Remember, there's a bunch of others on other shows hitting the network you guys can check out there as well. We'll be back in a little bit to talk all things crypto. As Mark alluded to at the top of the show, spoiler alert, things are popping off out there. We're breaking all down the volatility, the volume, the open interest changes, the skew, all that craziness, and a whole bunch more coming up on the Crypto Rundown in a little less than an hour over here. But before we go, let's go back around the horn. Mr. Meatball, let's start with you, folks. Want to reach out to you, talk about the retail trend or argue your VIX prediction or anything else out there. Where should they go? What should they do, sir?
Go to optionpit.com. Come and check us out. We put out great research every day, and hopefully we'll hear from you soon.
There you go. If you're one of the one-lot masses out there, you want to get educated so you could maybe be a 10-lot mass someday and survive perhaps the coming retail Mageddon out there, hit them up, optionpit.com. Maybe you want someone to do it for you. You don't want to do it yourself. Mr. Uncle Mike, where should they go? What should they do?
stcharleswealth.com. Give me a call. Shoot me an email. If you're looking for a financial advisor who's not afraid to delve in the option space, let's talk.
There you go. stcharleswealth.com is the place to go. And on behalf of the unklest of Mikes and the greasiest of meatballs, throw the rock lobster in there as well. Why not? And indeed myself. Thank all of you out there for downloading, streaming, subscribing, for listening live, for voting in our polls, for joining us live, and, of course, for sending in your questions. Stay tuned. We'll pump some fun stuff into the live chat if you're listening live. We'll be back in less than an hour now to break down the madness. We were going to do our top 5 for the year for crypto, but there's so much popping off out there that we'll have to table that and do another deep dive episode into all this madness. So stay tuned for the Crypto Rundown, and we'll back again tomorrow for more content, and then Wednesday, of course, Education Wednesday, and everything else you come to expect from us on the network. From the mad year that was 2020 and heading into, hopefully, a calmer year of 2021. See you next time.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.